Hey guys, this is Jay the Disruptor trying something a little new this morning. I wanted to see what it'd be like if we just kind of looked at the market and the way I approach some things. So what I'm going to do is I'm just going to go in and pull up my bar chart while we get situated, and we'll just see how this works. See if anyone's really into me doing this. I'm just not sure, but to me it seems interesting. So we'll see what it looks like. All right, so. Let's just jump in here. Okay, so you should be looking at my screen. I'm just going to double check. Yeah, you are. Great. All right. So anyway, one of the things I do, I have a watch list over here, and that watch list is just kind of my chart book, and we'll just jump through it and kind of go through a few of these this morning before the market opens, and just kind of see where we are. All right, so this one right here, this is a percent of stocks above a 200-day average. This is something I like. I love. Look at these last 3 weeks. It's a weekly candle. Let's do 2 years, so we can get some daily. Actually, we even drop in a little closer, 6 months. You can really see this is what we've looked like several days. Now we are below the 50-day moving average here, so we're still showing a little weakness. It is a downward moving 50-day average as well, which concerns me. We need to get a little better on this. I'm going to change my template. One of the ones I really like for just looking at these is my price action template, and then there we go. So we'll drop that back down to 6 months. So anyway, so here we are. Okay, you can see here we've got some lower highs. Now these are percentages from 0 to 100, basically saying the percentage of stocks above their their 200-day moving average. And so actually that was a 200-day moving average, and we'll add that back just to give you an idea of just really what the market looks like when we talk about breadth. And breadth is just simply how the stocks are participating. So you can see here 200-day moving down. We're below that moving down as well. There's just a lot there to worry about. I'm always looking for things I can draw lines on. Right here looks to be something. I've got 2 touches right there. I might just do that. I might just drop an array. I just want to mark progress on this just to show me when I'm getting better and better and better. Because the main question for me is, when do I buy back into the market? And I just don't know. I don't have a good answer on that one yet. Nothing really feels that reliable. All right, so here we're going to change. This is the 50-day stocks above their 50-day moving average. We're going to change this to a 50-day moving average just to keep in theme with it. It just seems like a fun way to look at it to me. So here we see prices risen above the 50-day moving average. The thing that concerns me is, look at these highs, lower highs, right? And we keep moving up above it and then moving down below it and then not getting higher. For me, I keep thinking I would really like to see something like a higher high. That would just be amazing. Again, just because it's always helpful to draw in a straight line, something horizontal rather than these diagonals that maybe aren't as actionable. That looks pretty good. A lot of touch right there. We'll draw one in right there. So again, when it comes to breadth, when it comes to the market, I'm still not all in. Just from a personal standpoint, you've got to find your own way to kind of balance this. But to me, I'm just not really feeling the market yet. Let's look at SPY. So SPY is, and this is just we'll get rid of this moving average. It's not so important here. We're going to move up my RSI. And I can talk about RSI a little bit. So what this is a resistance speed line. It basically, Dow Jones theory says that a 2/3 retracement shows a new trend. And so basically we went from a high to an extreme low, and I connected those. And then if it comes out of here, we should say, okay, well, that is a new trend. What has happened is it went up and then it came down. So I think that this line right there is going to be kind of a base that I'm going to start watching. So I'm going to draw that in. I'm going to get rid of that, and I'm going to draw this line here, right there. I think that's a good base for me. I don't want to see things go below that on SPY, and clearly I've got a high right there, and so I can use that as well. Now, something that I think we need to do when we talk about SPY is zoom out, because my fear is very simply a head and shoulders pattern. A head and shoulders, if you're not familiar, you've got a shoulder, which is here, a head, which is here, and another shoulder that is here. And this is a bearish top pattern. It basically suggests that price would go down into, this might be what you would call a distribution phase, where basically smart money is exiting sales and more speculative money is buying them. And then what could follow could be a markdown phase. Now, I'm not saying that's what's going to happen, but all eyes on, you know what I mean? I mean, right here, like we're touching this line right here at the moment with SPY, and SPY is just an ETF that marks the S&P 500. So I'm all eyes on this. I think that if we got to a higher high, that'd be great. But you got to remember, shoulders don't have to be symmetrical. It can go up higher. But this line right here, this is important. This is what we call the neckline. It's kind of like the underarm of the shoulder, right? And look at that. It just forms so perfectly here. It's almost scary how perfect that forms, that neckline. So if we got below this line, it would be a signal to me that we are in a downward trend or entering a markdown phase. This is SPY, not the ETF. And again, just kind of similar stuff happening here, right? We can see we're still below that line. Got our neckline, everything like that. Let's look at the QQQs. Right? Again, we have something similar. Qs have not rebounded to even get to the top of the shoulder yet. This is weaker, in my opinion. And that certainly concerns me, though it didn't have a bad day at all. And anyone who's not sure, this thing up on top, this is called Relative Strength Index and RSI. Basically, I've got my levels different than other people. So if you're looking at this thing, wait a minute, that doesn't look right. I put mine at a 40 and a 60. And then what I do is I look at ranges. So for instance, I'll draw in a rectangle to make it a little clearer. What I do here is I'll draw this. There we go. And basically, if the RSI is not getting above 40, then I consider that bearish. That is what we call a bearish range. I can change my my fill so it actually appears red and gives you an idea. That's kind of a bearish range. So here you can see we were in a bullish range, right? A bullish range is where the we do get above that. There it is. There we go. Sorry, guys. Where we do get above 60. But look at this. Instead, now 40 acts as resistance, right? We're not getting below that 40. So this is how I use RSI. I used to use it a lot for divergence. I found that divergence is hard to time, but these ranges prove pretty clear. If I get something that goes above a 60, I know that I'm in a bullish time. And if something hits 40 and bounces up, again, bullish. I do see sometimes things just range bound between 40 and 60, and then I just think it's undecided. We got time for just one more thing today, and I'll look into Apple. This is here. Apple, one thing I love about Apple is its relative strength to the market. You can see that was a previous high that was from, what is that? That is September 9th, 2021, right? And we did not get below that. We hit that support and came up, and now we're getting to a point to where we might actually be looking at testing these previous highs, which is very different. We talked about RSI, right? If 60 proves to be resistance, right, based on what I was just talking about, those RSI ranges, if 60 proves to be resistance, then I think we can understand that Apple's doing its own thing, that it's also going to be in a bearish phase. It just looks slightly different. But if we see 40 act as support and get above 60, I think we can feel better and better about things. That's all I have time for today. I'm hoping that this was interesting. It was nice, definitely, to have a chance to do this. And hoping that you guys dug the stream. This is the first time I've ever done one of these. If you liked it, hit the like, and also comment in the chats if this is something that might be fun to do every morning. I can always do this